Hello everyone and welcome to the Outspoken Market. Leandro Guerri speaking. Today's class it's about how to trade from options data, particularly talking about the gamma exposure levels. There are calculations we can do with options information to understand where the dealers eventually will do action on the price. Any exchange that offers you the possibility to trade options eventually also gives you the data. And from that data on a daily basis on omqs.com, I provide in the newsletter for free all the levels for the Bitcoin case. Now, if you're not trading Bitcoin or if you don't care about Bitcoin, stay with me because gamma exposure levels, the principles are the same for any assets. And especially if you trade the S&P 500 or any other asset in the world that has options data available, you can do these calculations as well. Now, before moving forward, in the case you have not watched yet these couple of other classes that I have here in the channel, I would like you to do so because they are the foundations for understanding from where all of the things that I'm going to be talking today are coming from. And you know me, this is not difficult. I make it in a way on which you can understand even if you don't have a mathematical background. Okay, so these are the preliminary phases for our class today and going to the practice. Now, this is the Bitcoin chart, 1 hour. Actually, the time frame does not matter much, but just to have a nice view, I pick up that one. And this snapshot was taken on October the 28th at 9 a.m. CET, just to understand where we are at the moment. At that time, Bitcoin was trading at 114K. These levels and all of this information you're seeing in the screen written in blue are the information taken from the options data. Now, from that, we can understand what we call the call and the put walls for 1 day to expiration, meaning the 29th in this case, 2 days to expiration, the 30th of October, and all expirations dates to the end of 2025. And with that information from the options, we can have the levels that you can see in the dotted line or in the solid lines. The fact that it's dotted or solid, I mean, it's just for visualization purposes, it does not change anything. What matters are the levels. You see that clearly the price has action in these levels. However, we took that reading from this time. These levels are ex ante, so they should work for what it has to come in the price action after that. And what we expect. Now, whenever the price moves, and it doesn't matter if it goes up or down, it will face action, resistance, or support in the levels that are marked within the lines. And then you use these levels to place your decision for whatever trading you're going to do. For example, from here, the price starts to go up. It would touch or will touch 115K, that is the put wall, 2 days to expiration. And here it will stop for a while. If the price retreats, then it's your take to buy a put option, to open a long straddle, to short the underlying asset, that in the case it's Bitcoin, for day trading. Because we are speaking only about 2 days to expiration, and the same would be the case for 1 day to expiration. So it's short-term trading. As the price eventually retreats, you understand what is the best level for you to take profits. If the price breaks up the 115, for example, likely it will go to 116, and again will stop a little bit there before coming back or eventually going up. So it gives you the timing to understand the direction of the market and plan your decision accordingly. And you can expect that, well, if that breaks up, I don't have much room between 115 and 116. Eventually placing long positions here trying to surf that way up is too risky because the range it's really narrow. While if bouncing back, well, I have a much wider environment to play around. Best case scenario ever, that it's even the upside trigger, that it's 118, for example, for that day. So breaking up 116, that takes you freeway to the 118. The same if we go to the down levels. So everything is documented and detailed ex ante. So it's not that I'm doing an analysis looking at the mirror. I'm looking at the future. So these lines, they are drawn looking forward, looking to the future. Then if we move to this picture, now we move the same reading, so I will not change the line's position, I will not change the writing. I will just go forward with the price chart. And this is what we had. So that snapshot was taken on the morning of the 29th of October. And you see this level over here was 114. It was this candle. And if you will look back, we were talking about this candle over here. That one. You see? That one is where we have stopped over here. Beautifully, it has happened exactly what I described. Oh, but yes, of course, Leandro, you knew what has happened. So, yeah, that's why. No, my friends, no, it isn't. The point is, we know where the lines are because these lines are the gamma exposure levels from the dealers. And then if the price moves up or down to the direction of one of these levels, you know what to expect. In this case, it happened to go up. It went through 115. Remember, breaking up that level, it would take us to 116. That was exactly the maximum price we have for that particular candle. Immediately it has bounced back, it stayed in that level before moving back again to the put wall, to the call wall, 2 days to expiration, 1 day to expiration, and then it went flirting with the downside trigger that eventually, if it had lost 112k, it would activate the downside directly to 110. Exactly what we had here before. And this is how you play. So you were in the morning of the 28th looking at the chart, Looking at these levels, you knew what to do if one direction or another would be taking place. Oh, I have lost that one. Eventually, you saw the price coming down, and then you saw the price reacting precisely on that downside trigger. You would then speculate eventually over here to open long positions, and you have a couple of opportunities of doing so. And the same in the case that you have gone short or bought puts over here. This is how you do. So whenever you go to the OMQS newsletter, remembering the site, it's free to access the newsletter, om-qs.com. You read in our quantitative blog every morning that reading, this study, and then you can take the decisions in a much more appropriated way. Now, that was the reading from the 28th to what has happened, and this was the morning of the 29th. And then, now I'm recording this on the 29th. This was 9 a.m. Central European Time, because this is when I took the data. So for you, actually, the time does not matter, because what matters are the levels, and then you must check what the levels are. But here I took this snapshot again on 9 a.m. CT, but you can see here the information has been updated with the readings for the day. So I no longer have the reading of the 28. Now all the readings are for the 29 for what it's gonna come after that. So we are a little bit more bearish than we were the day before, because all the levels, they were brought down. Now the upside trigger that would make a run directly to the 118 level, it's 115. We have for the next day, 1 day to expiration, so we're speaking about the 30th of October, the call and put walls for 1 day to expiration at the same level of 113. So what's the point here? The point is likely that we are going to be flirting with that level, mainly for the day, eventually visiting 114, expecting some resistance over here. If we go down, you can think about putting some long positions in 111 or 112, apologies, 110, expecting the bounce back to 113. Remember that you have a very narrow point over here, because we have the call wall for 2 days to expiration, so for the 31st of October in the 114. So it would be likely a short day. Of course, this can change along the day. Well, eventually, yes, if there is any, macroeconomic surprise, or a politician doing something stupid, or in the case of today, we have the interest rate announcement from the Federal Reserve. So there are exceptional stuff. Yesterday, well, there was not much to happen, so the price took its way without much external interference. But if we do have, now you can expect even larger movements to 108 or eventually 118, considering that we are in the middle of the way. Let's take a look then how we are now, because now we can go to see the live price, and hopefully you can see my screen, and within my screen you have the live price, something that is happening now. So this we are 12:46 CET. So that snapshot that I was showing you was taken here on 9 a.m. and the following 3 hours, let me zoom in that particular point so you can see. Well, since the 9 a.m. we are doing what? Flirting very choppy in the 113k level. Likely it's going to be a boring day, as I said. Eventually, well, maybe we'll go do a little bit of stretching to 114. If we have a little bit more volatility, we'll go to 111. But well, the cards are on the table. Do you understand? I need you to understand. Because this is extremely valuable information that I teach you, because this is my mission. I teach you so you can take decisions based on data, not based in emotions, not based in any kind of influencer speaking bullshit about cryptocurrencies, Bitcoin, from the fact that Bitcoin is not a cryptocurrency anyway, but this is another story. Or that hey, this silly stuff that we can see people talking in the markets. Okay, so if you have any doubts, any questions, do not hesitate to write to me. You know where to find me. I'm happy to take any questions you have to help you to understand it better. Stay tuned, subscribe to the channel, give your like. See you next time. Bye bye.